Moving forward with our project here, the fourth part, using Ichimoku in trading binary options, trading medium-term time frames, and this is the daily chart. We are approaching the end of our project here, and we still have 3 time frames to cover. Under the medium-term time frames, we looked at the 4-hour chart and now the daily chart, and then we're just going to have the long-term time frames, weekly and monthly, and we'll see how is it possible to trade binary options based on that. Now, being the case with the daily chart, whenever trading binary options, the main concern a trader has is to look for the best possible setup for the option to expire in the money. Now, if the option is in the money at the expiration date, then this means the option is profitable and the trade was successful. The following are the conditions for a binary option to be considered profitable. Now, if you buy puts, implies the trader is looking for a price to decrease, and therefore, in order for the option to be considered profitable, the price at the expiration date should be lower than the striking price. If these conditions are met, then the option is set to expire in the money, and of course it is considered profitable. The very opposite is true as well if you buy calls. So, like we said here, if you buy puts, you are expecting price to decline. I like to write this on the screen so you just have in front of your eyes what this means. And if you buy calls, so if you engage in buying calls, then you are looking for price to increase. So buying calls implies the trader is looking for price to increase, and therefore, in order for option to be considered profitable, the price at expiration date should be bigger than the striking price. And if these conditions are met, then the option is set to expire in the money and is considered to be profitable. Now, based on the above, the expiration date is important when trading binary options, and based on the time frame analyzed, the expiration date should vary, and hence the binary option should differ. The daily chart is at the limit of being considered long-term time frame, and starting from this time frame, and even binary options with short-term expiry dates can be traded as the Ichimoku Kinko Hyo elements, starting with this time frame, offer good support resistance area. The binary options recommended to be traded on the daily chart are options with medium to short term expiration date, like end of day would be the preferred expiration date here, because when price is trending, for example, here, when price is trending, let's say in a bullish market like this, or in a bearish market like this, let's find a bearish market. So when price is trending in a bearish market, for example, like this one, then when it is reaching the Kinjun on the daily time frames, then there is most likely the closing to be below the Kinjun the first time where it's reaching the Kinjun. See here, for example, this is a bearish market. Price is reaching the Kinjun during the day. So the highs here, if you look here at the OHLC, the highs here for this candle are 129.48. The Kinjun has a value of 129.40. So basically, by the time the 129.40 hits the Kinjun line, and you know that, so you might engage in buying puts for end of day expiration, because there is most likely, so the likelihood for price to retrace for the close of the day is increasingly higher. Depending on the moment of time during the day such a thing happens, the expiration dates can differ from short to medium term expiration dates. So you might even go for from a daily chart. You are seeing that on a daily chart the price hits the Kinjun, so you engage in buying puts with end of day expiration. But then, having this information, you might go on a 5-minute chart and going on the 5-minute chart, then you decide it based on the price action there. Then you decide to see what you decide to engage into short and very short-term expiration date until the end of day. As you know, price will most likely go there and do that and will expire in the money. Now, a second option, the second recommendation for option to be traded on, let me mark this area here, for options to be traded on the daily chart should be options with medium-term expiration date. And my recommendation here would be to look for either the end of week if the analysis is made at the beginning of the week, or 1 week expiration dates. And of course the one-touch options. The one-touch options are ideally to be traded, are ideally to be traded when specific patterns appear on this time frame, like contracting triangle, pennants, like inverse head and shoulder. For example, here this is an inverse head and shoulder, as you can see on a daily chart, beautifully being tested to the upside here, rejected, and then left shoulder, right shoulder, and the measure move of the inverse head and shoulder to the downside here, like that. Now you can play with this pattern in the sense that buying puts is the only way to treat that, and the expiration date for it should be I don't know, 26 periods from the moment that the neckline is being broken. So 26 periods here, and there you go, you have your expiration date. Or you can play with shorter times expiration date. Now this was the options, let's say, that the binary option that you can trade on the daily chart. Of course, you can use the option builder tool to customize your binary options. And let's try to move now on the concrete entry and exit strategies for this chart and for this time frame, and see what we have there. Stay tuned, please.